Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. On Wednesday, October 8, 2014, you're looking at a daily chart of the SPY, and we had a snapback today, if there ever is a snapback. We had big volume, we had a big reversal, and we almost hit my number from last night, but close, but no cigar. So last night I told you I thought we would get down, break below 192 in the SPY, and that would breach this low here, and I thought we would find some support and reverse back up. And I said the market was stretched like a rubber band, so it's either going to break or it's going to snap back. Well, we snapped back today, and let's just take a look at the hourly chart and just get an idea of how big this rally was. So look at this down here. You made a nice bottoming tail here and just off to the races. And then over here, let's see, we had the FOMC minutes came out and the market took off after the FOMC minutes. And they basically wanted you to believe that the Fed is going to issue another quantitative easing program and they're going to lower interest rates more. Now, interest rates are zero, so they're not lowering them anymore. The 10-year is down at whatever it is. It's ridiculous. I don't even know. I can't even see it on my chart here. Anyway, it's so low, forget about it. And there's no, the Fed's not going to do anything. They have this rhetoric because they're scared of losing the market. If they lose the market, they lose the economy. If they lose the economy, they lose the employment number. If they lose the employment number, they fail. So they can't have it. So they'll do anything to goose the market. Whatever was released today, you need to understand this. Whatever was released today by the Fed minutes, all that stuff, was not talked about in the room with the whoever's in that room, all these Fed governors, the central banks from around the country. That's not what they do. Whatever they talk, you'll never know what they talk about. You have no idea what they talk about. The minutes released are what they want you to know. It's that simple, okay? It's what they want you to think or believe. All in all, it doesn't matter. The market rallied. Who cares why it rallied? It rallied, and we had a huge up day. So where do we go from here? Well, let's go back to the daily chart because we'll get a picture of this big day. All right, let's move this over. All right, couple things going on. With a day like this, there's normally more upside to be had. Okay? So I would suggest that tomorrow there's a good chance that you'll have a little bit upside in the morning at least, and you may even get into this 50-period moving average here up at 197.5, give or take. Now, beyond that, I'm not sure because you're going to have a lot of resistance in this area, first of all. You have the 20 sloping down into the 50. Pardon me. And most importantly, and this is what nobody talks about because nobody really understands, and they don't work every time, but we know they do work from time to time, as you've seen or heard in these videos. There's a cycle topping really this week, next week. So between, let's say, Friday to Monday, there's a shorter term cycle, but it's a 6-week cycle. In my work, says it's topping, and that should mean or could mean some downward pressure in the market. So I've told you that October is going to be up and down. We have options expiration next week. We have earnings beginning now. We're already into earnings season, so they're going to become many more per day, fast and furious, with the earnings releases into next week during options expiration. So what that tells me, it's a recipe for the market to whip around. So normally, a move like this would promote more upside, but also normally it's not abnormal, okay, for the market to at least retrace part of the move. So markets like to retest their lows. Guess what? We had a low here and we retested that low today. Markets also like to retrace part of a move. So from this low, we had an up move, then we retrace, okay? And so this was a double bottom, and we had an up move, we could retrace. Okay, we could retrace half this move in a day or two, and that wouldn't be out of the ordinary at all, and that would still put us in a stronger position if we pushed a little higher. So I can't tell you which way the market's going to go tomorrow or whatever, but I can tell you that while there could and should be some more upside to this move, there's going to be more downside to come. So, you have to understand where the oversold stocks are. Energy sector has tons of oversold stocks. And you know what? It's enough on the market. Let's go to the energy sector. All right. Right now, let's go to, I'm going to put the USO up on a screen, but I want to talk about the price of crude oil. That's not the USO. Talking and typing every time. It's unbelievable. All right. So the USO had a bottoming tail today, and the price of crude, where's my crude on this other platform here? Okay. Price of crude oil right now as we speak is 87.78. All right. So 87.78, we hit a low of 86.68, I think was the number today. Okay. Now, I'll tell you that we'll probably go down and retest that number. So if we're going down to retest that number in crude, I think the energy stocks will still have some pressure on top of them, pushing them lower. Okay? So I don't know if the whole market comes down with it, but I just wanted to talk about crude for a second and the USO. We did have a bottoming tail, but like I just said, even if we go up tomorrow a little bit, it's not out of the ordinary to go back and test this low one more time. We can break the low or we can test the low. Just because this is a bottoming tail doesn't mean the market isn't going to come down and retest. Okay, that's all I'm saying. If you look at a weekly chart, this was a daily chart. Remember, this weekly chart doesn't look anything like the daily chart. This can come down in a minute tomorrow or Friday. Okay, and retest these lows. This is a weekly chart. You want to if you finish the weekly chart with the same type of candle like you did on the daily chart, one of these narrow body bar candles, or a doji candle, then we're in business. And then I would be looking at the energy sector. But right now, oil's still weak, and I think we go down and retest at least that number in the price of crude. Okay. Next up, gold. Gold's been on a ride. So I've been telling you gold is weak. It has been weak, but it did stage a rally today. Give credit where credit's due. Gold staged a rally. So right now, the price of gold, the futures contract, is $12.22. Okay, here's USO. This is GLD over here, okay, on this chart. And this is the weekly. Let's flip over to the daily. So, gold still can have some upside, and it can have some upside even to this area here on the GLD. And like I've been saying, gold can rally up to the 1240, 1250 area and still be in the weaker position according to my work. So we're going to give gold the upside bias for now, okay? And if we get up to that 1240, 1250 area, we may be looking for some indication of either a topping signal or potentially an acceleration point, and we'll know it when we get there, but we're not there, so we don't know it. So that's where we stand in gold. Nice rally today, but I think gold rallied on the nonsense of lower interest rates, more money flooded into the economy by the Fed. All that's conjecture. That's not what they said, but that's what they want you to believe they said. So basically, gold caught a bid, fine, great. If you're long gold, unbelievable, and you can probably ride up to 1250 top end right now, but it could be volatile, and I still think there's lower prices to come. I don't want to belabor the point. I'm sorry. Okay. One more thing I want to mention is I'm going to bring up the TLT, which is the proxy for the 20 to 30 year Treasury bond. And I just want to point something out. So the market's been going down, and Treasury bond prices have been going up. Okay, let's see what the spider looks like. Right, let's just take a look. SPY, okay, going down. Okay, from 9/18. Okay, September 18th. Okay, TLT. September 17th, September 18th, okay? Going up. Directly inverse to the market. Now here's what's just one of these things that you have to notice. It doesn't mean anything right now. It's just, I look for indicators, right? That's the common sense part of what I do. I look all around, and if something stands out, I just take note of it, and I'll decide whether it's important, as things unfold. So here's something I noticed today. The TLT was basically flat, and it was actually up a couple of ticks, or it was up 3 cents. The Treasury bond was up today, okay? The 30-year Treasury bond was up. So you would think, with the type of up day we had in the stock market, right? Just a wild day. S&P was up almost 34 points. Dow was up 275. NASDAQ was up 83. And the Treasury bonds didn't budge. They were actually up a little bit, all right? So we're at this double top, but if we had look at this yesterday, okay, that big down day in the market, and what did you have? You had the up day in Treasuries. Today, you had a huge up day in the market, and Treasuries didn't budge. Why? Well, they always say the bond market's a lot smarter than the stock market, so that's why I take notice. Usually the bond market is smart money. I like smart money, okay? I just take notice of it. That's a wrap for tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks. Another episode of Common Sense Market Analysis.